Hi, this is Dave. Welcome to the weekly market recap, closing out the week for Friday, July the 12th, 2013. Recording this on Sunday the 14th. So it's a beautiful Sunday day out there, and for that reason, let's try to keep this very brief and to the point. So the big news this week in the starting out with the Dow futures on the daily chart, as we usually do, we're just coming right back up into this minor double top zone that we had been that we identified going back, the recent highs. So this week we had an all-time closing high in the S&P futures, but closing high does not mean intraday high. So we really need to get back above, in order to get anything going to the high side, we need to get back above a breakout of these these all-time highs in order to get something going to the high side. So all we did in the Dow futures is we came up and we tested it, and you can see we tested these recent highs, which is pretty significant. But we came into resistance there, and we sort of stalled there, right at that line in the sand going into the close on Friday. So if you look at one of the scenarios that we were talking about last week, a few weeks before that, we were looking for a little bit more downside in order to, punch down into these levels so that we could really establish a reasonable long trade. And last week, in last week's video, one of the things that we discussed was that this was really starting to look like a flag, a bullish continuation flag. And if we broke out above this trend line here, or above the flag, then that would really say a lot. Then we'd be looking for a retest of the highs. So that one scenario that we talked about definitely played out. So now let's look at what we can expect, or what the potential scenarios would be going forward. Now I like to look at the market in terms of scenarios. Sometimes I'll have a bias on the market, oftentimes, but you really have to be aware that if the market is sort of like a computer program, in the sense that if this happens, then expect that, and if that happens, then expect this. So that's why I like to look at the market this way, because you're not always going to be right. In fact, some of the best portfolio managers in the world are only right, and I'm talking the best of the best, 6 out of 10 times. So take that and put it into perspective. And you really have to look at, if the market does this, well, how am I going to react to that? Or how am I going to be proactive, based on that? So at this point in time, if we look at the body of evidence in front of us, let's take a look at the price action. First of all, the price action is testing these highs. I'm not expecting a break right through those highs immediately. What I'm looking for is a minor shallow pullback first, down into some sort of support levels, or some you could get a pullback down into the top of that trend line, or this 21 exponential moving average. That would be a reasonable pullback, and then I'd be looking for a push, through those highs. That's one scenario. That scenario to me would be, we've got no resistance overhead, and that to me would be the breakout scenario to look for in terms of a new continuation higher. So the reason why I'm expecting some sort of a minor pullback at this point in time is because, you've got all the momentum indicators seem to be, in terms of the stochastics anyways, the stochastic indicators are overbought at this point in time. So because they're overbought in this point in time, I would be looking for some sort of a roll down, and then maybe, a roll back up. So I'm not sure that the momentum indicators will come all the way back down below 20 again. But they are overbought. So maybe a situation like going back in history like this, where we had the pullback and then a continuation higher. So they came back into, the 50, right around the 50% level, or the 30% level. So that's sort of what I would be expecting to have happen. And that's one of the scenarios I'll be watching for. If you look at the MACD indicator, it's recently crossed to the high side, and it's back up above its zero line resistance. So I'm expecting more upside in this market, but I think before we see that, we need to have some sort of a minor pullback and then a continuation. Now that that could be a pretty shallow pullback. It could be as shallow as the 8-period exponential moving average, which today sits around 15,194. It could be the 21 exponential moving average. It could be this trend line. It could be a 50% retracement of this last move up. Let's see where that kind of comes in. So that would bring us all the way back into these lower levels here. Because we've broken out of a flag, I wouldn't really be expecting that much of a pullback for that reason. So I would think that let me just throw the 382 on there. See, the 382 at this point in time, let me just zoom in. The 382 at this point in time lines up with the 21 exponential moving average and the breakout of this sort of flag pattern. So that, I think, would be the shallow pullback that I would be looking for. So at this point in time, I think the scenario really that makes sense to me is, you've got a high in place, retest the high, get this shallow pullback, and then look for a continuation move back up through the highs to the high side. That's what I'd be looking for. From a trading perspective, this area would make more sense from a risk-reward standpoint, in my opinion, in order to look at, looking for some type of support off that level and a continuation higher. So that's sort of how I'm looking at the market at this point in time. We need to exercise caution here, but the reason why I'm really bullish on this market is if you look at the correlations, this is the IWM, which tracks the Russell small cap index. And if you look at the, I don't really watch this index enough, but I am aware that the Russell is breaking or has broken to all-time highs. And if we throw a couple of trend lines on there, you've got this up channel here. You're close to the top of that up channel, so I wouldn't really expect a move through it unless we go parabolic, but maybe a test of that up channel and then a pullback. Momentum indicators are overbought on the stochastics, but the MACD has room to move up to the high side. So, these are the all-time highs here, right at 100, just over 100. And in the IWM, which tracks the Russell, I don't have the feed for the Russell futures, so I'm just using the IWM. And let's just put this line on here. This is really the major support where the breakout is, and you sort of had this, it's not a clean reverse head and shoulders pattern, but it is, it is a breakout above that level. So this is the main reason why I'm expecting continuation higher. I think the Russell is leading the charge in the stock indices, and I think that we just really need to expect higher prices. That's sort of what I'm looking at based on what I'm seeing in these other indices. So if we take a look at the S&P futures, I can clean a lot of this. I can clean a lot of this stuff off the charts. I apologize. These charts can get they can get pretty messy, but if you look at where we're at in the S&P futures, we're doing basically the same thing that the Dow is doing. We're just coming right back up and testing this all-time high. So if we can get through that all-time high, we really have no resistance. We have no resistance back up to the high side. So it's sort of blue sky territory above there. So if we did that, what I'd be looking for example, in all of the indices is at least, if we break out of this level here, I'd be looking at some extensions, some Fibonacci extensions, 1272, 1618, which, in the S&P futures would bring us all the way into potentially 1758. So, we'll reassess that if and when we do actually get a breakout. If we fail that breakout, then I'd just be looking for a return back into this range. This applies to all the indices. I'd be looking for a pullback back into this range if we fail. And from a swing trading perspective, I'm not really all that interested in trading in this range because that's usually where you get chopped up. We've established the range. The question is, have we had enough time in order to build value in that, and are we ready for the next directional move, or are we just going to, go sideways? If you look at some seasonality charts, I'm not going to pull any up, but just based on some of the research I've done, some of the seasonality charts show the stock indices going sideways, for the month of July and August. So that is a very big possibility that, we could just chop around in this range through July and August, and then wait, even possibly into September. So at this point in time, this is why I like to look at decision points, and I think we really need a break outside of this sort of dead zone in order to really get a directional move going either to the high side and or to the low side. So this is really, I'm favoring the high side just because we are bullish across the board. And I think I've, beat that one to death. So let me move on. Let's look at the Nasdaq. So the Nasdaq, you can see, is just broken out of its all-time, its chart highs here. I'm not sure if these are the all-time highs. I would have to go back. I'm assuming they are, but verify that for yourself, please. And this scenario is playing out, and we're breaking above these highs. So I'm going to take these fibs off the chart. That scenario did not play out where we got some sort of a decent pullback. We are just above these highs here at around 3047-ish. So we're just above that. We closed at 3062. So the Nasdaq looks really strong. I would be looking for at this point in time, some sort of move up to, let me just see here, some of these Fibonacci extensions, possibly as high as, the intermediate target would be like around 3,100, which is about 40 points higher, 3,184-ish, which is a good little clip to the high side. So let's leave that on the chart for next week. Let's take a look at the transports. I always type that in wrong for some reason. TRAN. So the transports are a little bit weaker than the Dow is. Let me just delete this off the chart. The Dow is coming into its highs, and the patterns look very similar, but you can see that the transports are a little bit weaker than the Dow. The Dow would be somewhere up in this area, whereas the transports are down in this area. So we'll be looking to see if the transports are going to confirm from a Dow theory perspective. At this point in time, they're not. Let's take a look at the some of the key currencies. So the breakdance fight, the flip-flop, continues between the dollar index and the euro. We came all the way back down into, let me delete some of these levels off here. I'll leave this level in because this Fibonacci retracement is relevant. Let me just zoom into the chart here. From this minor high, this minor low to this minor high, you can see we came right into, actually let me redraw these because they're backwards. So this low, this high, we came right into, the 50% retracement and the 61.8% zone, and we held that initially, but you can see that all we're really doing is flip-flopping back and forth. There's the dollar index. We're above 82.50 support, and if we look at the euro broke $1.30 again, and we just came right back up, and we're probably into, let me just delete some of these off because they're a little bit confusing and perhaps not really relevant right now. But if we look at this last minor move, we came right into that zone of resistance, the 50 to 618, and we're just, holding below the 50, but we're above $1.30 support. So this to me just looks like, a breakdance fight back and forth. Nothing's really changed here. If you're trying to directionally trade either one of these markets, unless your time horizon is fairly short and you're pretty nimble, you're probably getting chopped up in these markets. So in my opinion, I would look for maybe 1 to 3 day moves in these markets and then get the hell out. So that's sort of what I'd be looking at. I'm not actively trading these markets at this point in time, but I do have some currency things on the go, for lack of a better description. Let's take a look at the USD CAD. The USD CAD, I was looking at potential targets of $1.76, up to $1.08, and you can see all we did was really pull back really hard in here. And this first target has been met, 105. Let me just delete this one off the chart here. We pulled back pretty hard, and I'm still, as long as we hold that zone there of the 50%, the 618. I'm still net bullish on this market, and I'm looking to see if we can put in another sort of swing high or another wave higher off of this zone. So if I look at this from, I would need to delete some of these. If I look at this from a measured move sort of perspective, I'm just going to delete out, those targets there. And if I look at this from a measured move sort of perspective, this last wave up off of this level, you can see that was a measured move, a pretty decent measured move from there to there. And then the last time that this came down, let's see where the retracement came in. That held that 61.8% zone. So if history repeats itself and we get another wave up off of the 61.8% zone, what I'm going to do is just project the measured move of this last move off of that 618 zone and see where that brings us. You see, that brings us right into 1078. So this is the same level that we've been looking at, and I think that if we can hold this support zone of the 61.8 and 50% retracement zone, and then we have another sort of measured move up or another wave up equal to these last two moves up, that could bring us right into our ultimate target of 1078. So I like that. From that perspective, I'm just going to put this red so that we know that that is, that's our target, that's our resistance zone. I still like it as long as we can hold, 103, let's say 103, 1029, something somewhere around there. Let me just actually mark this a little bit stronger, right where that 618 is. That's really the major support to this right now is around 103 right in there. I'll make it a little bit thicker. There. So that's the level we're looking at to hold support, and this is the level we're looking at in terms of a target, in terms of where we think the market might be going. So let's jump over to the gold market. In last week's analysis, one of the scenarios we were looking at was, we had this minor pullback, and we were looking to see if we could hold this 61.8% retracement and break above that swing high. So in other words, we were looking for this, we were looking for this sort of scenario, support, and then looking to see if we could break above this level right in here. And that played out nicely. And then you can see what happened was we came right back down and we tested it and we found support. So I think at this point in time, you can see also, momentum indicators to the high side, the MACD back to the high side. I think at this point in time, we have an intermediate bottom. We were very close to long-term support. We were just above long-term support. Now, there's nothing to say that we couldn't flush back down into 1,000 to 1,100, but we're pretty close to long-term support on the weekly charts. And looking at the daily chart where we put in this sort of intermediate bottoming pattern, this to me looks like we may have a short-term bottom in place. And as long as we can hold above 1266 and we can get back above the 21 exponential moving average nicely and see the 21 exponential moving average start doing this, then I think we're back on the buy side of the gold. Now it is still net negative in terms of things like trending indicators and long-term trend, but to me this is an intermediate trend change. So I'll be looking at this going forward and seeing if we're going to start putting in from a market structure perspective higher highs plus higher lows. That's basically from a market structure perspective. It looks to me like we may start to do that. So that puts me more on the the trend change sort of intermediate bullish side of the gold. So if we look at let's look at silver and see if silver's following suit. Yep, silver's doing the same sort of thing there. It held that 61.8. It slipped through it a little bit. It held it ultimately, and it's just struggling. It needs to really get back above, we'll call it 2022.5. We really need to get back up above there in order to start looking, more bullish. We've got this. I should have drew this on the gold chart as well, but you can see this to me looks like a potential sustainable trend line. I'm going to project this going forward and see if, when we come back down for the second test, this would be the first test of this trend line. If we come back down for the second test, that will be an area to see if we're going to find support and if we are going to continue higher. So let me go back to the gold. I should be doing the same thing on the gold chart, where I'm going to connect this this low and this first lower high and project it forward and see if we're going to find some sort of support off of that on the next test. So let me just extend it forward and see. That one's a little bit accelerated. Actually, not really. I like it. I like it a lot. So let's move forward into some other markets. Let's look at the nutty gas. So the nutty gas, we were looking at the same sort of scenario where we had a minor high and a minor low in place, and I might have drawn these a little bit wrong. Yeah, this doesn't really make sense. Let me delete this off the chart. I probably made a mistake when I drew those, but we are looking at potential support, intermediate support in the natural gas, unless and if we break this level coming in here, then I'd be looking for a retest of some of these lows. So that's sort of what I'm looking at. This should actually be red. If we have this kind of scenario that could play out, and we also have this kind of scenario that could play out where it does that. So at this point in time, it could go either way, and I think the decision points here, in my opinion, would be a break of this low and a break above these highs. So to me, this whole area here, except on maybe a day trading basis, it's like 20 cents wide is an entire, this box here is an entire dead zone from a swing trading perspective. And I think that, in order to get anything going on a trending basis again, we need to get above, these two areas here. So we need to get above, 378. We need to get below 352 in order to get some sort of directional bias back up to the high side or the low side. Hope that makes sense. Let's take a quick coffee break. Okay, coffee break is over. Let me jump over to the crude oil. Crude oil has been exceptionally strong, and this is the breakout that we've been looking at. We've been looking for, for months. We were talking about, even when we pulled back down into 86.91, that was potential support. Weren't interested in shorting below there, and we were looking for this breakout above 97-ish for a long time. We finally got that, but we were looking at resistance between 100 to 101, possibly $103. If we could get above $103, which we did this week, and you can see we're holding above there. So you can see these levels, when these levels play out, they're sort of magical in a way. They play out really nicely. Once you get a good grasp on understanding support and resistance and how price reacts around those levels, it's actually kind of, it even surprises you when you see it actually happen, even though when you might think it might happen and then it does actually happen. I hope that makes sense. But see, we're holding $103 a barrel. I think we have the potential at this point in time to move, potentially to $110, $115 a barrel. I would be looking at where I would like to get in this trade personally, because I just haven't been, I haven't really been proactively monitoring it in order to get in the position, but I'd like to see a push down back into $100 a barrel and maybe all the way back into $96 a barrel. So these two areas to me look like good areas. If we could get a push into 100. Now, having said that, I'm not sure that it's going to happen. It probably, because it's had enough time to build up energy, it's probably ready to hold this level and then move higher. But under normal conditions, I'd be looking for a move back to 100 or back to this trend line in order to establish a lower risk entry into the trade. It's probably not going to happen. Having said that, it's probably going to hold this level and, continue higher if it's going to move higher. We never really know what's going to happen in the market. So there's the crude oil. I forgot to look at the 30-year bond in last week's video, and to me the 30-year bond looks negative. It looks negative since it broke 139 in the futures market. Momentum indicators are really buried to the downside. So we could expect some sort of a pushback in to resistance like we're seeing here. And at this point in time, I would consider this area here, I should be drawing this with the red pen. I would consider this area here to be resistance. And I'll be looking to see if we're going to come back into this trend line where it meets the 20 exponential moving average, if we're going to fail and we're going to put in another leg lower. So I don't see any divergences or anything to the, to indicate otherwise, that this trend will not sort of, continue. But having said that, I recognize that we're really overdone in the short term on momentum indicators, and we could get a higher pullback. If we did get a higher pullback, we could come back and retest. We could come all the way back and retest the breakout area. That's a possibility. So I think that the risk in taking this trade ultimately would be a break above the breakout point. So this trade, to me, because of government intervention, potential government intervention, is really risky. And anything could happen in this market, but it could happen in an exaggerated fashion in markets that, for lack of a better word, are really manipulated or propped up. So I don't know. This trade to me has been really a hard trade to get into or to do anything about, and I'm still on the sidelines with it, looking to see if we're going to develop more of a secular shift and a secular trend. I think there'll be a lot of time to get into the trade. That's why I'm not too much in a rush to get into it. If you look at where I drew this line, you've got some long-term support down there. I just extended it forward, and let me see, is this a high volume area? It's relatively high volume. It's not extremely high volume, but I'm not surprised that we're bouncing off of this level. So this is what I'd really like to see in terms of continuation, to break back down below that level, and then to see, okay, where can we go from there. So at this point in time, I'm still negative on the bonds, recognizing that we could get a higher retracement. But if we break this level here, then I think we're going to probably get some decent continuation to the downside. That being said, I don't really have a clear vision on where a good entry point into that trade might potentially be, for the reasons that I've outlined. So let's see, are there any other markets that we should be looking at? We covered some of the key metals. We covered the, let's take just a quick look at the copper. So copper to me looks like very similar to the gold and the silver, and it's put in that sort of a pattern where it's doing this, and then we'll look to see if we can do that. Our immediate resistance is this down trending trend line. So trying to think if there are any other markets that we might want to look at. Let me just flip over to some of the momentum charts to see if there's anything setting up. So we covered the stock indices. We don't need to cover the VIX really. We covered the 30-year. I'm sure the 10-year probably looks, let's look at the 10-year. It probably looks a lot the same in terms of what's going on here. These charts look different though. Let's take a look. It looks like Google fired a recent long breakout on the Darvas squeeze perspective. So this is interesting. We're breaking above a weekly Darvas squeeze, which is significant. It's not a Darvas squeeze, it's a Darvas box. But the daily chart looks interesting because you've got this Darvas squeeze signal firing off on the daily chart where you're breaking above this box. It's printed a signal along at 910 with a potential target according to this methodology at 958. I think we closed at 923. So there is still some potential for upside there. This is an interesting signal. I was not watching it in real time. Having said that, let's see where these highs are. This to me I think is all-time. We're breaking to new all-time highs. So Google seems to be a good proxy of what's going on. And it seems to be an obvious market leader if we look at what some of the other market indices are doing. stock indices are doing, and this is breaking all-time highs as well. So we've got resistance at 921. We're just above long-term resistance. So if we can continue above there, I mean, we're in blue sky territory. There's no major chart resistance overhead in Google. Having said that, I mean, we're almost trading $1,000 a share. That's insane. Let's take a look at, everyone likes to look at Apple for whatever reason. To me, Apple looks like, let's look at it on the more traditional charts just for 1 second. Oops. Okay, let's look at Apple on the more traditional charts and see. Okay, so to me it looks like Apple's putting in some sort of a complex bottoming process. I think we really need to get above this trend line in order to get anything going back up to the high side. Having said that, the major resistance, like this is a minor higher low off of this low. I think the major resistance is 471. That's $40 per share away. So this to me just looks like it's building a base, and we'll need to see here if we can build a base at some point and get above 471. That might look, interesting going forward at some point in the future. So just going to take a quick look through some of these momentum charts and see if anything looks at all interesting. Google looked interesting, and the dollar index is setting up a potential Darvish squeeze on the weekly chart, but we're far away from either the high or the low of the box now. It did, if we look at the UUP, it did fire an initial weekly signal, signaling that the dollar index might be going higher. So the way I would look at this is I would say, okay, well, we had an initial signal. If we broke back up above, 2293 in the UUP, but then we have some resistance in the background a little bit higher. So if we could get above 2295, let's say, and then 2314 in the UUP, then I think we could continue on with targets as high as 2418. At this point in time, though, we really need to get a decisive move out of that range. So the analysis on the dollar index and the euro, to me, still stands. We're still flip-flopping and breakdance fighting back and forth. So let's not confuse the issue there. Just looking at the Canadian dollar did have an initial Darvish squeeze break to the downside on the weekly chart. So we'll be looking to see if at some point the dollar index will pick up strength, and this would sort of track the USD versus the CAD. This is the opposite of that chart. So looking to see if at some point, we can actually get some continuation of the USD CAD higher and continuation of the Canadian dollar lower, if that makes sense. Let's see, the British pound. The British pound looks like it's setting up a potential Darvish squeeze to the downside with a break of 148, potential target of 140. That would be, wow, 8 cents. That's pretty huge. We should keep our eye on that one there. These are pretty hard signals to trade unless you give them some decent room. So I would never ever trade one of these in the futures market. The best way, in my opinion, to trade these is some sort of, possibly the FXB with an option. But, having said that, this needs time to develop. I'm not really looking at setting up a trade there. Let's see, the copper. The copper has a potential breakout on the daily chart. The copper is signaling that it really wants to go higher. It's already printed 2 signals here, and then it's back into its Darvish box range. So when I see a low and then a higher low and then a potential Darvish squeeze to the high side, this to me looks like copper's ready to bust a move higher, at least probably into this weekly resistance at 329. And that lines up with this Darvish squeeze reversal signal here, back to the high side. So that would bode well for gold and silver as well. So I think the analysis on gold and silver on the earlier analysis, I'm going to have to stick with that. These are the euro versus the cable in the in the forex market. It looks like this cross here, EUR GBP, euro versus the British pound, looks like it wants to go higher. We've got multiple signals on both the daily and the weekly Darvish squeeze. That's a good confluence play in between both of those. Potential target of 87.99. So that's of interest. I never really trade these pairs, and but I do I do look at them from time to time. Let's take a look at the some of the grains too. So we've got a potential breakout in the soybeans again, but the soybeans are really at this point in time just sideways. The wheat fired a Darvish squeeze short initially on the weekly chart, and it's right back up into that breakdown area. So you've got some mixed signals on the grains where some of them look like they want to go higher and some of them look like they want to go lower. The best moves in the grains, in my opinion, are when they're all moving together. So that's all I really have this week. I don't think we missed anything. In fact, we may have actually gone a little bit longer than we should have gone today in view of what I said earlier. Just trying to see if there's anything that interesting setting up in the markets. The markets are a little bit boring now going into the summer. And, a lot of people are taking holidays and a lot of things are slowing down a little bit. So it's to be expected. It's hard to stay focused in the summer on a day-to-day basis, but let's keep trying and let's look for opportunities. And I hope that helps, and I look forward to connecting with everybody again next week. Same bat time, same bat channel. All the best and good trading.